How you doing?
Live on the YouTube again.
Live on the YouTube, live on the IG, live on the TT.
Don't say that.
It's the TT.
That looks strange,
That's
dude.
pretty funny, though. Pretty funny. How come no one said that yet? How come I'm the only one that's ever discovered that?
Yeah.
In the history of TikTok. All right, guys. So we're here for your mortgage, real estate, alien questions. Ready when you are. 3, 2, 1, shoot. Couple things I want to know from you guys. Couple things I want to know is where you're located, what the weather is, city and state, please. City and state. Where are you guys? What's up with you, man? How's your weekend?
It was good. It was good. Yeah, we got.
Just waiting for people to come in.
Yep. I understand. I'll be here. Yep. Once or twice.
Oh, they're coming. Here's
Here they
Hugo.
come. What's up, Hugo?
Rose.
Trying to get the.
BB. How you guys doing? Good morning. Good morning in Southern California. I don't know where you guys are at. Remember, I want to know your city and state. Where you guys located? Mark, where you located? Susie, where you located? City and state, guys. Condiociones. Where you at? City and state. User 7423.
Condiocio?
User 8634. Where you guys at? Joined. Where you guys at?
Good
Veronica.
to see you guys. Veronica Stock.
Monroe, Connecticut.
What's
in
up,
the
Connecticut?
house.
Connecticut.
What's your name? User 8634. DC in the house.
Now we got some good programs that are coming out. The interest rates. Pull the interest rates up.
Interest rates.
So interest rates are.
Always
There's
doing
some
boring
crazy stuff going on. There's some crazy stuff. Well, you know the first Fed meeting is in 2 days, right? You know that, right?
Mm-hmm.
So Jerome Powell is coming out and going to tell us whether or not they're going to reduce interest rates.
Illinois in the house.
Illinois, what's
Waffle
up?
production.
Oh, dude, we're back down. That's a big drop. That's a big drop. Hey, we just pulled the interest rates up on New American Funding website. On the New American Funding website, here's what they're saying. 5.25. 5.25. 5.25. And for an FA, that's for a 15-year conventional. 5.25.
New Haven.
New Haven. I just love that word.
Alicia.
That's like New Haven, Connecticut. That's all fancy.
Welcome, everyone.
Is everybody in New Haven rich? I think so. That's how the rest of the world sees that everybody in New Haven, it's like the Hamptons. It's like the only way you get there is to be really, really ritzy. Anyway, back to the mortgage rates. 15-year, no, she says, no. Okay, 15-year mortgage, 5.25. The 30-year FHA is 5.5. That's pretty darn powerful. New Haven, Connecticut is sketchy. I've never been to New Haven, Connecticut. Never
Great
been
pizza, though.
Great pizza. That's what they say about New York. And you know what? New York, it's true. If you go to different parts of New York, the pizza's like weird. It's so good.
Mm-hmm.
It's so good. It's weird.
Oh, are you serious?
Yeah.
Poor connection.
Dude, we're getting connection. No, we're back up. So we are on Facebook, Instagram, TikTok, and YouTube, answering all of your questions, trying to get you a house in 2024. Got some good stuff happening. Interest rates are supposedly going down, and they actually are. They're 5.25 on the website.
Barstool, New Haven, Connecticut, capital of pizza. Uncle Lee.
Pizza.
Hey,
What's
Lee's in
up,
the house.
Uncle Lee in the Arizona?
You made it, dude. You made it to Uncle.
I'm an uncle.
I'm still brother.
Dude, I've been uncle for a long time.
Yeah.
Yeah.
Yuma AZ in the house.
AZ.
Love it.
What's up, Yuma AZ? So, 5.25, 15-year rate. 5.5, 30-year fixed FHA. Cool. What credit score do you need for conventional? 5% down. You take that.
620, y'all. 620. Now, here, know this. If you have a 620, 2-year work history, have some assets, it doesn't mean you'll get qualified. A 620 is a guideline, so that's where you start. You can also be a 700. You can also be an 800. And the probability of you getting approved with higher scores is much higher. Now, that being said, it shouldn't stop you from getting pre-qualified. It shouldn't stop you from seeing where you stand. Because if you can buy now, I recommend you do. Why should they buy right now?
Well, there's pent-up demand. So what pent-up demand is for the last probably 18 months, there's been people that say, hey, I would really like to buy a house, but interest rates are at 8% at the peak, 8%. And when we run numbers, they're like not even close at 8%, not even close. So these people are like, hey, I want to buy a house, but I can't. I just can't. So they sit in the background. And every month, let's say there's 30,000. Every month, that 30,000 gets added to another 30,000 and another 30,000 because people get older, people get jobs, people get into spots. Now, all of a sudden, interest rates start coming down. And like I said, on the website right now, 15-year fixed, 5.25, 30-year fixed, 5.5. Now, all of a sudden, all of these people that could not qualify at 8, at 5.5, they can qualify. And every loan officer out there has seen a massive, massive increase in mortgage applications. We can see it. Now, it hasn't worked its way through to business. Business is a little better, but the applications are crazy, crazy. Sometimes we get off a live. We got off a live last week, and we dug into our automated applications, people we didn't even talk to, and we had 10. And I was like, oh my God. So we had to get a hold of these people, put them to the LOAs, make sure we got in touch with people. The ones that want to buy, we want to help you buy. But as soon as all of that works its way through and it starts hitting the market, you're going to have a whole lot of buyers chasing these houses. And that's just simple supply and demand. The price will go up. So you can't, you can move the interest rate. If you got a higher interest rate, like let's say you got a 5.5 and you think it's going to 4. Let's just say you think it's going to 4 or even 3.9. Well, once you're in, you can refinance and get the 4. But if you locked in at 500,000, you don't get to change that purchase price. So if all these people come in to buy that house and all of a sudden it's now 550 or 600, you don't get to change that. You do get to change your interest rate. So that's why.
Violetta, surprisingly, the best pizza I've had was in Iraq.
Iraq.
I'll give you my 2 favorite spots, guys.
Cool.
So for New York, it's San Biagio's. It's in Montclair, California. For Chicago, it's Giorgiano's.
Thank you for the balloons. Somebody's there. Balloons. I don't even see them though.
I don't either. It's like a mystery.
I
here.
know the balloons. Thank you on Instagram. We appreciate you guys. For some reason, we're not seeing the comments on IG. We do see them on YouTube, on TikTok, and on Facebook. So thank you guys.
I just sent a potential client to you. He has a 790 mid score, 5-year work history. He will be calling you.
Awesome.
Thanks,
thank
Arizona.
You, AZ in the house.
Uncle Lee says thank you.
Oh, in the house.
NS Bizbica. Having a hard time getting approved. My DTI is under 39%. Trying to buy second home. Okay. What's the challenge?
Yeah, what's a second home? So there's a criteria, different criteria. Remember that primary residence is a category. Primary residence. Easiest underwriting, primary residence. The next category is second home. It's a little tougher underwriting, a little tougher. And then the third category is investment property. So for second home, you're going to need 10% down, and then you're going to need something that you won't need on a primary most of the time. That's called reserves. You need reserves, which means if I lost my job tomorrow, can I make both my primary residence and my second home payment? So let's say your primary residence is $2,000 a month. Your second home is $3,000 a month. Total of $5,000 a month. Well, if you need 6 months reserves, I need 5,000 times 6, 30 grand inside of a 401k, bank account, savings account, something that could pay the bills. Sometimes if your FICO score is not great, you'll get 12-month reserve requirements all the way up to 24-month in certain cases. So you do need reserves, and if your loan officer doesn't know how to put the reserves in correctly, you won't get the DU.
Boom. So sometimes it's just extra cash, guys. Sometimes it's just extra cash, get an approval. Now, when it comes to working a file, we don't just put in data once and then hit enter and try to see if it gets approved. We actually look for a way to get it done. How does it get done? And sometimes we go, oh, you need a gift from a relative. Hey, does your uncle, grandpa, cousin, whoever have an extra $5 grand laying around
that they can give you? They'll give you.
Gift you?
Yes.
How many times do people say yes?
Yes, all the time. All the time. All the time. All the time. And we're big on do not commit mortgage fraud. So they gifted it to you. That's it. They gifted it to you. All you have to do is tell me they gifted it to you. I believe you. And we move forward.
And there's a lot of different ways to work a file. So that's what we do, guys. That's why a lot of our buyers actually get in, even the ones that have been denied by other loan officers.
Alberto Cruz, thank you for following us. We appreciate you on Instagram. I don't know if you're there because it's not showing up on our feed. So I appreciate all of you guys. Yeah, the balloons are showing up and the other things that you're doing are showing up. But for some reason, your comments are. So I'm not intentionally ignoring you. TikTok, we can still see you. YouTube, we can still see you. And Facebook, you are good to go.
Arizona, 5% DTI, 10K down. That goes up to the one up top. Thank you, Arizona, for the referral.
Appreciate you. Yep.
We love referrals, guys. Alberto Cruz, thanks for following. Okay, user 4114. If you own a home already and purchase a new one, can you get favorable loan terms on the new home? So it's kind of like, hey, I already did this. Can I get a discount? So the answer is?
Yes.
Oh, what?
Yes.
What?
Yes. But here's the catch. If it's your primary residence, if it's your primary residence and you have fulfilled the requirements, like if you had an FHA on your old house, and the FHA requirement was you lived there for 1 year, and then you passed that, you lived there for 3 years, and then decided to buy another primary house because you had a couple kids and now you need a bigger house, yes, you can get favorable loan terms on your new primary residence. Sometimes we even recommend you finance out of the FHA to a conventional during the right term and use the FHA to buy your new house. So there's a lot of ways to do this, but yes, you can still get favorable terms.
All right. NSN, BS, BZBKA. I don't know how to pronounce
My
that,
loan
guys.
officer sucks.
Tell us why.
Yeah, tell us why.
He has 100K
Yeah.
in stocks for his reserves.
Yeah.
That's a lot of reserves, guys.
Yeah.
And for whatever reason, his loan officer sucks. It might be because he's not getting approved or the loan officer doesn't know what to
Yeah.
do. So know this. When it comes to loan officer, it is experience. It is experience. It's not just because you pass a test and you have a license
Yeah.
now, you know everything. It's not that at all. You know what you know after you pass the test?
It's different. Nothing.
Nothing.
Yeah, you know nothing.
Nothing.
You're actually, you get taught the wrong stuff
Yes.
in loan officer school. You get taught that, hey, the max a conventional will ever go is 3543. And I'm like standing up and going, hey, I'm straight out of loan officer school. This many years ago. But straight out of loan officer school, the max conventional will go is 3543. And they laughed at me and they're like, yeah, get out of here. Nobody gets in it. 3543.
Well,
So if it's a new loan officer and they're inexperienced, they don't know. And your 100 grand, you're only allowed to use 75%. Still enough, but 75% of anything that fluctuates.
So here's a little bit of story, okay? Story time, guys.
Story time. Tell us the story.
So, one of the first files I ever worked, it came from my cousin. My cousin referred me his brother-in-law or something like that. So I spoke to the guy. I knew the guy. I met him at birthday parties and stuff. He comes to me and says, hey, I heard you do loans. I want to get a loan. So I do. And I put the file together the way the school taught me how to do it, okay? And I did it. And he says, I can't get anything for that value. And I'm like, well, this is what it is, man. Get a cosigner, make more money, figure it out. So what happens is a couple months go by, and he is still shopping out there. He's still trying to make it work with the really low loan amount. And then I realized the true guidelines. So I take his loan, and I push it to the guideline max. And I go, holy cow, it's approved. I took it to my manager, and I'm like, is this real? Can I do this? And he's like, yeah, if you put in the data, it's good.
Yeah.
You're good to go. And I'm like, okay. I call him up, and I say, hey, bud, I'm getting really good at this. I can now qualify you for this amount now. And blah, 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 blah. And he said, oh, okay, Chris, that's cool. But we actually started working with a new loan officer, and he's already done that for us, and we're already in escrow.
Yeah, that sucks, huh?
But
It's an
here's-
expensive lesson.
An expensive lesson, but know this. We've been through all the lessons. We've been through them. We know what we're doing now. We're not new. We're not just, baby legs walking. We're on strong, firm
If you don't have a
legs.
good loan officer, you can get hurt. You can get hurt in ways that you don't even know, and the loan officer didn't intend it. They just don't know. So they just don't know. Can I get a DPA 2% with interest rate lower than 7.5 in FHA? Cal Hava's less than 7.5 right now.
Yes, you can actually get
Yeah.
the full down payment.
Yeah.
And I'll actually get you the rate right now for Cal Hava.
Yeah, she's going to pull up Cal Hava right now, but you can. Cal Hava usually is pretty competitive for the things that you get, and Cal Hava has
Yep, there it is.
3 different packages,
For just the down
6.125,
payment.
just the 1.5, 6.125 for Cal Hava right now. So which means you can get the down payment. This doesn't cover your closing costs, so keep that in mind. But down payment, 6.125, way better. So
And you'll
what?
get 3.5% down.
Okay, so user 8306. What's the difference between a lender and a broker? Ooh, that's a loan officer. That's a loan officer.
Settle in, guys.
This is gonna be a good one.
We
This is gonna be a
love
good
these.
one.
We
This is gonna be a
love
good
these.
one.
Settle in.
Oh, we can see him now. People are showing up.
Hey, guys.
So the difference between a lender and a broker. Okay, first off, when you're in the loan business, you get authorized by the NMLS, National Mortgage Licensing System. And then you have a license to practice. Now you have to choose which way you want to do it. You can go the broker route. And the broker route is, hey, listen, I'm going to broker loans. I don't work for anybody. I'm going to broker loans. So that's a broker route. Or you can go the lender route, which is I work for a lender. We're direct lenders. We work for New American Funding. Now, which is better? And here's the catch. No one is better. No one. But they have little tricky things going back and forth. Like, for instance, a good broker is going to have probably 10 to 40 different brokerage lines. And they sell it because it's a sales job. They sell it going, hey, listen, I have 40 different brokerage lines. So here's the part they don't tell you. when they choose their broker lines, they have to choose their commission rate. You can go all the way up to 300 basis points, in some places even more, which is 3%. Or you can go all the way down to 30 basis points, which is 1/3 of a percent. Now, that's 1/3 of a percent is probably too little. 300 is way too much, but you won't know this. All you'll know is they brokered it. And it sounds like, because they'll tell you this, I'm going to shop the rate amongst all the different places. Yeah, but the problem is that their pricing comes in because of the way they built their contract with that broker line. Ooh, if you're a loan officer, you're going to be mad, big mad. So when you become a direct lender, you have to choose a rate. Let's say you choose 1%. So from then on, your payment is going to be 1%. That's all you get. You sometimes you have to go lower, with in our world it's called Corp Gen, in order to compete or whatever. But I don't get to choose my commission on any given day. I can't make more or less on a loan because of something I did. It doesn't work that way. So brokers are sometimes better. Direct lenders are sometimes better. And at New American Funding, we have the ability to broker in addition to being a direct lender. What that means is when I pull the rates up, I see New American Funding's rate, and then I see Wells Fargo. If Wells Fargo is better, I tell the client, I say, hey, listen, I can do better at Wells Fargo by 1/8. And here's what it means in payment. Here's what it means long term. Now, there are downsides to brokering that loan, because as soon as they broker, a broker, for the most part, sells their loan in the secondary market as soon as it funds, or within a month of it funding. So they sell it because there's money on the back end of that. At New American Funding, we keep our loans, which means we service our loans, which means you're going to be dealing with New American Funding. If not, you'll get brokered, and then all of a sudden that'll go to Mr. Cooper, and then your servicer will change, and it gets to be a nightmare as you own your loan. So that's the short version of what this is. Anyway, moving on.
Okay, so is there any way to avoid closing costs, realtor fees, if I look for a house and buy myself?
Oh, I just answered that question a few minutes ago. So can you avoid closing costs? I actually answered your question. My tech woman came in and said, hey, here's this question, exact questions. That's how I know. So can you avoid closing costs? No, closing costs are closing costs. You have to pay for the notary to sit down, sign, and take your thumbprint. You have to pay for that. You have to pay for title and escrow. You have to pay for it. Now, you don't have to pay for it. Sometimes the seller will pay for it. They can pay for all closing costs. The seller can pay for everything. Sometimes the realtor will pay for it. Sometimes the lender will pay for it. There's ways that lenders can pay for it. And none of it's free. This is always going to cost you something. And can you forget the realtor? Yes, you can, but I highly recommend you do not. Let me give you a quick horror story. I had somebody who went FSBO, that's for sale by owner. They're skipping the realtor. And they did not know to look for foundation cracks. 3 months after they bought the house, the foundation collapsed. That's a $60,000 fix.
Dang.
$60,000 because they did not know. See, when a realtor walks through a house, they're not going, oh, this is a pretty house. Oh, I love this. What they're looking for is cracks on the wall, going, foundation's moving. Oh, this ceiling is whiter than the other ceiling. Why? Roof leak. I need to know, go look at a roof leak. There's so many things that a realtor, a good realtor, by the way, because there's a lot of not good realtors in this world, a lot of them. I'd say 90% are not the realtor I would use. There's only about 10% to find that one. But I believe a realtor is worth every freaking penny. And I buy real estate all the time, and I use different realtors based off of a certain criteria. So can you avoid it? Technically, you can. You can go FSBO, seller financing. We've done those where the guy comes to me and says, hey, Lee, I don't want to use a realtor. And I'm like, okay, I don't recommend this. I'll still finance you, but I don't recommend it. And they're like, well, what do I do next? And I'm like, well, you got to go get the contract. Like, where do I get the contract? And I'm like, I'm not your realtor and I can't give you legal advice. I can tell you that my clients in the past have been able to get it from escrow. So you might want to call your escrow. Their next question is, what's escrow? And I said, oh, you got to choose that escrow, because once you choose that escrow is in your world. I'm like, how do I choose an escrow? I don't give legal advice. I can't. I can tell you that when I close loans, these are the 5 escrows that I use, and I do have a good relationship with this escrow officer. And then, so it's really weird because it's contracts and I deal in loans. So can you get away with it? Yeah, highly recommend you don't.
Yeah, Bree just said, yep, she contacted a realtor about a duplex from photos alone, and he said foundation issues, pass. Good
Foundation,
agent.
yeah.
Good agent.
Yeah, foundation issues are, that's a big one. And they have to disclose, there's material knowledge. As a seller, I don't have to follow rules. If I say, hey, I'm selling my house and I only sell to purple people, I like purple people and nobody but a purple person can buy my house. Can I do that as a seller? Yes, all day long. Now, can a realtor only show to purple people? No, it's against the law. Can a loan officer only loan to purple people? No, it's against the law. But as the owner of the property, I get to choose whatever I want. So think that through.
All right, Elite Jerseys, Cal Halfa, this doesn't apply in Texas. You're correct. We don't know where you're at, Elite Jerseys, but I do have another program.
In Texas, there's a
sitting
bunch
right
of them.
in front of me that'll give you, and this is just my first glance, 675. So you're already in a better situation, give you the down payment, and some of that is forgiven.
Yep.
So just want to put that out there. Elite
We do a
Jerseys,
lot of business
reach
in
out.
Texas. A lot of business in Texas. My primary residence is in Texas. My second home is in California. I go back and forth between the two.
All right, time for commercial.
Okay, cool. If you need a badass loan, you need a badass loan officer. Call Badass Loan Officer Chris and Lee at New American Funding by screenshotting what you see on the screen right now. This is going to disappear via special effects in 5, 4, 3, 2, 1. Twist out. This is a twist out, right?
Boom. That's called a flip.
Backflip.
It's a flip.
Backflip.
Tactical
Cool.
gaming.
Yeah.
Just bought a house. Thank you guys for the great information.
We're glad we could help you. Were we your loan officers? I hope we were. If
too.
not, all right, cool.
You too. I hope you're a loan officer.
Yeah.
Okay, something I want to share with you guys, okay? This is a really big deal. It's becoming more popular, especially with the baby boomers coming into age, okay? I got hit by a client that said, my grandmother, my grandfather passed away. It's just my grandmother paying the mortgage. Things are tight. When he passed away, she didn't get all the income. She's still making the mortgage payment. The rate is fantastic. She wants to keep her home. What can she do? So if you got hit with that data, what would you think?
I was listening.
Very common. Very common. So I said, perfect candidate for something called a reverse mortgage.
Okay, got it. Okay.
Grandma.
I would say reverse mortgage.
Boom, man, you're awesome.
I
You're
know.
like one of the
yeah,
best.
I know, yeah.
So here's what that does, guys. It allows grandma or grandpa or grandma and grandpa to not make a mortgage payment if they don't want to or if they can't. Okay. So if they have a mortgage and there's equity in there, what they'll do is they'll take another loan. Okay, brand new loan. Now there's a new mortgage. Okay, it's a new mortgage. And on this one, they don't have to make a mortgage payment if they don't want to. So I'm only sharing this because it seems to be more of a popular thing. Social Security doesn't necessarily pay you the most amount of money, and sometimes that's all a person has. As long as a homeowner that is over 62 years old can pay their taxes and their insurance, we can get them a mortgage where they won't have to make the mortgage payment if they can't or don't want to. So just want to put that out because we all are looking out for our grandparents.
Yep, I think it's a good idea. A reverse mortgage is like fire. Use it correctly, it'll heat and warm your house. Incorrectly, it'll burn your house down. Appropriate or inappropriate for the perfect user. That guy doesn't have a name. Whoever that is, just
a face.
Yeah, it's just a face.
Why do you promote FHAs? All it means is low down payment and high monthly payment.
Uh-oh, is that a loan officer? We're going to find out because I'm about to tell you FHA. I'm about to tell you FHA, conventional. I'm going to tell you that they actually do compete with each other. So, FHA, they get bagged on because you know what? You have to do mortgage insurance. It's mandatory. You're right. It's mandatory. It's 0.55. Mortgage insurance, mandatory if you put 3.5% down. 0.55. 0.50 if you put more than 10% down. 0.50. Actually, more than 5% down. More than 5% down. So, when I price a loan, I price FHA. And let's say I priced FHA today and it came in at 5.5. And then I restructure the loan conventional. And the conventional comes in at 6%. So, I now have 5.5 and 6%. Is the conventional better or is the FHA better? Well, if you add the 0.55, I am now comparing 6% with 6.05%. Either way, this is going to be locked in for 30 years. Either way. Now, FHA will allow me to go to 56.99% on the back end and mostly 46.99.
Yeah.
46.99 on the front end. Front end is PITI, principal, interest, taxes, and insurance. Back end is PITI plus all revolving debt. So, is FHA better or worse? I'm going to say it's a vehicle that is more liberal in its underwriting. It's more forgiving in its underwriting. Now, if you're an established homeowner and you own lots of houses and you got an 800 FICO score and you're putting 20% down, probably would never give you an FHA loan. Never, 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 never. However, if you're a first-time homebuyer just trying to figure this out, if you ask me what's better, I'm going to say, hey, listen, it's going to depend. Let's figure out your credit score, down payment, debt to income ratio, what your whole life looks like. And if we do that, then we can move forward. So FHA is not necessarily better or worse. It's appropriate or inappropriate.
Yeah. Who in the world buys a $700,000 house and puts 3% down? Well, I'll tell you that person. I'll tell you exactly that person.
First-time homebuyer in California.
In our area, guess what homes are worth?
Everything
About
700 G's.
$700,000.
Everything,
$700,000.
Everything.
So the median income is about $70,000 a year. Okay. So if I put husband and wife making 70, they're both making about $140,000 a year. They just started their careers and they want to start their family. Well, they don't have a whole lot of money saved. Fannie Mae and Freddie Mac said, hey, we realize this is a thing. We're going to create a program where you only need to put 3% down. Home possible, home ready. And if you qualify based on the income tests and all these other things, you can get a mortgage at this down payment. So who would? They would. Now, if it's not appropriate for you, I agree.
Yeah.
If it is appropriate for you, I agree. How am I to judge or tell a person what's appropriate for them? It's just finance, guys.
Yeah.
There's no good, bad, right, or wrong. It's either appropriate or inappropriate.
And the best scenario is you're going to have an 848 FICO score, 848. You're going to put over 20% down, and you're going to have 2 years of reserves. But very few people meet that criteria.
Yep.
Very few people.
Yep. Zachary Bowshire, 565 FICO. Can you help?
One way or another, we can help, Zachary. Here's the catch. FHA starts at 580. 580. We can go down to 500, but you have to put a very big down payment. But here's the other part of that. If you have active collections right now, like I pulled one not that long ago that had 30-day recent collections, and they want to buy a house. And I said, these are recent collections, like last month. Like there's 30 of them. You're no way an underwriter's going to go, why, yes, I want to give this person debt. I want to trust this person with $500,000. It's not. So if it's something that happened 2 years ago, I was a dumb kid and I didn't pay my bills. Okay, cool, got it, 2 years ago. But if it's current, probably going to be a problem.
Yeah, wow. We got some Spanish in here. Lee, you gonna
All right,
help
cool.
me. Vendo casas. What's that mean? Vendo. What's vendo mean? Do banco, your bank, de costos de papelo? Do we need papers for your bank? Is that what that means?
I guess.
Oscar, help us, man.
Yeah, Oscar. We don't know
know
what you're
all
talking
the-
about. We don't,
Our staff speaks Spanish, but they're not here with us.
Martha speaks fluent Spanish, so we're good to go.
So Jersey said the lender, the preferred lender, will not lower the down and the interest rate from DPA with DPA 7.25 and need closing. So yes, the programs set the rate, so we cannot affect the rate. This program may have a buy down though. You may be able to buy it down.
Yep.
And what I'm going to recommend is give us a call because we'll look up the programs in your area and we'll see what's available and see what the rate is. And if it's better, then it's better.
We beat preferred lenders all the time.
What's better, FHA or conventional? Ooh, Joe, that's a good question.
Depends on your situation. If you're an investor, I would say conventional all day, every day. If you're a first-time home buyer, I can make a good case for FHA, especially if you're doing a house hack where you're buying a 4-unit and you're getting in 1 unit, but you're buying the 4 unit for 3.5% down, 3.5% down, and you're able to use the other 3 units to help you qualify for the 4 unit. So you now are an investor and primary residence using an FHA loan. So depends.
Yeah. Yo le puedo ayudar a comprar casas.
Okay.
I said real estate.
Yeah.
All right, Oscar.
All right, cool.
Where you
Oscar,
licensed at, man?
Where you licensed at?
EXP, where you licensed at?
Yep.
EXP is nationwide. Gay solo. Would it be smart to get a house with my siblings?
Do you trust your siblings? Because when you get in with your siblings, if your life starts to veer off and you and your siblings land up getting significant others and you want to buy other houses, this could be an issue. unless you trust them and you're the kind of family that stays together, in which case we do it all the time. We do father, son all the time. Sometimes we'll do mother, father, son, and daughter, all of them in one house. Yes, we do it all the time.
Not just to mention, guys, pay attention to your neighborhoods where you're living. There's cars up and down the street. If you're wondering why there's so many cars, it's because this is it. It's multi-families in one home, because house prices, especially right here, are expensive. And if you want to own a home, if you want tax breaks, if you want the ability to build equity, maybe it's the only route you can go. And if it is, it's all right. If it fits all the things, the boxes that he just said.
And by the way, there's some happy endings that are happening from these TikTok lives. We got off a TikTok live probably about 2 weeks ago. Somebody called us up and said, "Hey, I'd like to check a house." And they're like, "Hey, other lenders, they're saying we can't do it. So we said, send us all the documents, go back and forth, get everything qualified. We land up getting them qualified. This weekend, they're looking at houses and talking with Chris, and they're like, "Hey, we're doing this house, and I think we're in escrow today. I'm pretty sure we're in escrow today." All because somebody saw us on live. Happy when that happens, and they were convinced that they couldn't get a house. They were convinced because they dealt with other loan officers, and it did not go their way. Happy Monday, Rajvinder. What's up, Rajvinder? Great to see you.
One of our
Great
faves.
to see you.
My favorite Rajvinder, by
Your
the way.
favorite? My favorite too.
My favorite.
Dude.
Number one.
We have a lot in common.
Matt, does putting 20% down lower the interest rate?
Sometimes, Matt. Most of the time, yes. But the thing that's the most powerful factor on interest rate, FICO score. FICO score. Because remember, everything factors in. And if you have an 800 plus FICO score and you put 20% down, you're very little risk of you walking away from that loan, which means you're going to get the best rate. You know why? Because every bank wants you. Every bank wants that 800 FICO, 20% down. So they have to lower the rate to compete with everybody else.
Not to mention, you will absolutely not pay mortgage insurance.
Yep. Don't forget that part.
Yep. Leah Jade, how do new construction loans work?
Well, you get a piece of land and you start constructing a house, and we don't do it. We do the takeout loan, which means as soon as you do the new construction loan, which is much higher interest rates, then when you're done with constructing it, you want out of that loan because it's too expensive, and we do it's called a takeout loan. So we do the takeout loan.
And we don't do them, but we got a good source for them, so reach out to us. We can point you in the right direction.
Okay.
So the guy with no name, I'm looking to put $350,000 down for a $700,000 home in Ontario, California. Do I need to get pre-approved?
Yes. If you're borrowing $350,000 and you're going to put $350,000 down, because that's 700 divided by 2. If you're going to put $350,000 down, I know I'm genius.
Fast,
dude,
too.
I'm
You're
fast.
like,
Dude, you have no idea.
Divided by 2.
You have no idea. You're still borrowing $350,000. Now, you can do it probably without getting really deep qualified, but your interest rates are not going to be pretty. If you go regular, like conventional conforming, I would go conventional for you, probably Fannie Mae on that one. I'll probably go Fannie Mae, and depending on what how you're going to use this property. If it's your forever home, then I would probably put you in a prevailing par rate right now with the strategic refinance in about a year and a half to 2 years, because that's going to be your forever rate. There's a strategy I would put together for you. So yes, you do have to get qualified if you want the best deal.
And you got a good situation here, because he says that he has large down payment, 830 FICO, $250,000 a year in income, which is all beautiful, but you still got to go through the same process as everyone else. The person that you're putting in an offer in needs to know that you can finance the rest. They need to know. That's where we come in. A Mezcua 1. Can I take a loan against my home to purchase another?
Yes, we do it all the time. They're called HELOCs, second mortgages, or cash out refis. 3 different main categories. HELOCs, like a credit card. You take $50,000 credit card, use it as you want. A second mortgage is a term, means for 10 years you have to pay it back. And a cash out refi means that we're just taking your old loan, paying it off, and giving you cash. So there's 3 methods to do it. We do them all the time.
Rajvinder, you're just settle in. This is right up Lee's alley. He loves this conversation. So here's what she's asking. Is it worth it to get a grant that Cali is offering for ADU?
Rajvinder, I'm literally going through this. I came from the city this morning dealing with an ADU, because I'm building an ADU right now on one of my properties. And I did look at that $40,000 California grant, and it looks appealing. appealing. It looks damn appealing. It does. But when you get into the depths of it, it's a cow half a product, and you have to use their builders. You have to follow their builders' criteria and their subcontractors. And inside of that, they pad the heck out of it. So the loan has to be $200,000 or more in order for you to get the $40,000, and you have to do it through their mechanism, their builder, their general manager. And as I looked at that, I was like, no, you're getting your $40,000 back.
She's rolling her eyes, man.
Yeah, you're getting your $40,000 back the hard way. Now, to the unexperienced person, I would say, yeah, it looks good, but don't do it. For me, I actually have a choice. I can either finance, self-finance, or do the 40 grand. And if I thought the 40 grand was going to be good, I'd finance with 40 grand, and when the time comes, write the check. But after I really looked through it, I was like, no, you guys are going to make it back on all the different things that you charge for. So I'm not a fan. Yeah, that's
all
it.
right. Everybody, thank you for the love. Like this, share this. Please tell the world what we're doing here, and we're helping people get mortgages, answering questions. And thank you everyone that's already done that. There's a whole lot going on.
Appreciate you guys. We appreciate you very much.
B Vines, what is a good down payment assistance program for a first-time home buyer with a score of
580. B Vines, I got bad news for you. Bad news. Very bad news.
I stopped myself, man.
I got very bad news for you. If you got a 580 FICO score, nobody's going to give you a down payment assistance program. They're not out there. If there are, please school me, but because they don't exist. 580, I hate to say this, but you earned your 580 FICO score. You did something in your past that made your 580 be a 580. The down payment assistance usually starts at 640. Most of them want 660. We got one about 2 weeks ago with 620. In-house. It's a proprietary product. But all of them are going to look at your history. And when I pull people's credit, it breaks my heart when I go, hey, listen, I'm going to validate these things to make sure they're real, because I don't want anything reporting on you that's not real. Are you currently late on this? Are you currently late on this? Are you currently late on this? Yes. You're probably not getting a loan. If you have current lates that, like last month, and remember, when we pull your credit, we see everything for the last 10 years. And I even shared with you, I'll share your credit report with you, and I'll show you, hey, listen, if this is wrong, I want to challenge it, get it off. But if it's right, we got to deal with it. So 580, probably not happening.
Leo Geno, I'm 23 years old, trying to buy a $33,000 house in Florida. What should I do?
You tell them.
33,000? Are we sure it's 33,000, Leo? Because if you got a $33,000 house, how much is that worth, and where's the address? It might be 330,000.
Yeah.
But if it's 33, truly, we can't lend on it.
We can't lend on it.
It's too low of a loan amount.
Yeah, we got to be at about 100 grand or more before we start lending, and that's because of something called HPM, high price mortgage. The law says that the fees can't exceed a certain percentage of the loan, and about 100 grand, the fees start breaking that HPM. So banks just stay away from them.
Rajvinder said, I knew the free money is never free.
Never free, Rajvinder. Never free. I wish it was. If it was, I would be standing in line. I have access to the programs. I get to read the guidelines. But I also understand how it works. And I go, no. And I'm like, literally have to make that choice. I was going through the 40 grand. I was like, this might be worth it. And then when I'm done, I'll just pay the whole thing off.
Well, let's not be so mean,
and
guys.
It's not free money.
Let's not be so mean, because Gavin Newsom does need a new winery.
Yeah, he does.
Come on, guys. Let's help him get it.
Yeah.
Yeah, whatever. Lex, does business loss count against income if you W-2 income as well?
Lex, yes. If you own the business. So when you give me your tax returns, I'm going to say, hey, I need your 1040. On your 1040, we're going to see if there's any business income or loss that you flowed through. And when you flowed through, my next question is going to go, do you own more than 25% of this business? And Lex, if you say, yes, I own 100%, then I'm going to say, okay, cool, give me your 1120s and K1s too. And you're like, those are my business tax returns. I'm like, yes, you said you own more than 25%. If you own 100%, okay, it's easier. But if you own 25% or more, I need your 1120s and your K1s, because I get to see the full business tax return, and then how much of you own it, that's in the K1. And then I get to take that and flow it through, but it will count against your AGI, adjusted gross income. So if you lost money, great for taxes, horrible for buying a house.
Dang! Oscar Hernandez, who gonna lend at 580? Too risky.
I know, Oscar, but you know what? People, they don't like to hear that, and it breaks my heart every time I tell people, because I get it. These people want a house, and their credit score, you earned it, and the quicker you realize you earned that credit score, the quicker you can get over it, fix it, and then earn your 800 credit score.
Annie, how much do you need to to afford a $500,000 house with the 760 credit score? Good job, Annie. Good job on that
760. With that 760, I'd say right about $100 grand household income. That's husband and wife or both borrowers on the loan. About 100, 110 with no back end debt. That's where we start. And then if you own more than 100, if you make more than 110 household, then we get to move forward from there and get a better package.
I want to say congratulations to all you out there with the good credit.
Yeah.
Congratulations. It's not easy. You're making
every single
moves.
one of us was a dumb kid.
Yeah.
We all said, what are you going to do? Chase me? Yeah. We didn't know. They were going to chase you.
How about a jacuzzi?
You're like, yeah, he bought a jacuzzi. I didn't pay for my electric bill when I left California, when I left the Navy. I'm like, what are you going to do? Chase me? They're like, no, but it's going to be waiting for you when you come back to California. And forever was on my credit. And I used to tell everybody the bullshit story that everybody, well, they didn't tell me about it, or they charged me wrong or something like that. When I finally manned up and I said, hey, yes, I didn't pay that $363 bill because I thought I could get away with it. And you know what? 20 years later, when I moved back to California, it was waiting for me with interest, and I had to pay it, and I paid it. And I realized, hey, all of us were dumb kids at one point. We all screwed up. So what? Let's fix it and let's move forward. But the first step in fixing a problem is understanding that the problem exists and acknowledge it. Now let's move forward.
Man, you should have seen my jacuzzi.
Dude,
though.
it was a nice
It was
jacuzzi,
a
right?
badass.
Yeah, you never got to use it, right?
I used it a bunch of times.
Did you?
Until it got stolen from me.
All right, fair
My
enough.
roommate stole it.
All right.
Can you use a first-time homeowner's loan to buy out grandparents' reverse mortgage loan? Ooh. Can you use a first-time loan?
Yeah, all day
absolutely.
long. Yeah, all day, every day. 3 dots.
Do. User, do you have an option for 5% down on jumbo?
Probably not. Probably not. Jumbo is when you get above $1 million.
Well, above the loan limit.
Yeah, but there's loan limit. Every county has a different loan limit. LA County is about $1 million. Orange County is about $1 million. San Diego County is about $1 million. Riverside County and San Bernardino 766,000. But once you get above that number, it turns into what's called a jumbo loan, and it becomes a higher risk for the bank. More risk means more down payments. Most jumbos are going to want 20%. 20%. Now you're going to hear 10%. And kind of true, because we do what's called an 80-10-10. So 80% conventional conforming jumbo loan, 10% second loan, 10% out of your pocket. So that's called an 80-10-10. Most of them want 20% down for jumbos.
Where are you located?
He's right there.
Yep.
I'm right here.
Accurate.
Cool. Yep. Riverside, California.
SoCal, baby. Martha's Rumors. Oscar Hernandez. Is it better? It is better to tell them reality.
Oh yes, and you know what? I gotta tell them. I get so many customers. We get so many people calling us that I don't have time to coddle people. I'm gonna say, hey, listen, I pulled somebody the other day that had a 494 FICO, and they're like, can I get a house? And I said, no. There's not a lender in the land that's gonna lend to you. No way. Would you lend to you? And when they say, well, probably not. And I said, yeah, credit reflects what you did. Now, if there's an error, there's laws on your side, and the laws will help you. But if it's not an error and you just messed up what people lent you, the banks aren't going to lend you. It's just simple.
Group time 1. Do you need to show bank statements to get approval?
You take.
Okay, so it depends on the loan type. It absolutely depends on the loan type. If we're talking about the traditional programs that we're talking about, probably, and here's why. You're going to have to wire money in for the down payment, the deposit. You're going to have to wire money in for the down payment and the closing costs. So where's that money coming from? Most people don't have a financial account other than a checking or a savings to wire that money in. So you're going to have to disclose that statement, because that's where the money came from. And then the underwriter's going to want to know how long the money's been there. If you're thinking you can wire straight from your 401k, probably not an option. It's probably not something you're going to need to do. But if you're going with a specialty program that is not traditional, then maybe we can get you in with no bank statements. But the question is, The bank knows this. What are you trying to hide? They know where people hide stuff and where people do things. And here's the other thing. If you get direct deposits to your account from your income, from your payroll, they're going to want to see those bank statements. They need to know that you're getting paid and then the money's getting deposited. So if you're going traditional, yes, non-traditional, there are some, but expect a bigger down payment.
And the underwriters are smart. And we don't get access to everything. Like for instance, when a client gives me their tax return, they give it to me and I have to take it in good faith. And then when we start the loan, the client signs something called a 4506T. I don't get to see this. The client signs it. And then the underwriter sends off to the IRS and says, this client said they earned $96,000 in 2023. Mr. IRS, what do they tell you? And the IRS sends the underwriter back a transcript. And if that transcript doesn't match, they caught you. And I don't even know what happened. There's a lot of things that there's back-end systems to catch people if they're doing things inaccurately. There's also something called cavers. We don't usually get involved in cavers. SI, statement of identity. These things that we don't usually get involved in. People who hide child support, divorces, IRS liens. There's a bunch of ways they catch you that we don't even know. So the best way is just deal with everything head on. If you have child support, I want to know about it. If you got an IRS problem, I want to know about it. Why? Because if I know about it up front, I can deal with it. I can put you in the right loan. If you say, hey, listen, I'm buying, but I'm in the middle of a divorce. All right, I know how to deal with that. I know if you have a good divorce where you guys are both talking to each other, then most loans are on the table. But if you have a bad divorce, there's only a certain couple of loans that are on the table, and we have to do them perfectly and correctly. So, next.
Nestle, requirements for I-10 buyer with married couple, U.S. citizen buying jointly, income is total of 106, no debt, 780 credit.
Congratulations on the 780 credit. That is great. Now, the I-10 is a weird loan because you're either I-10 or you're not. There's no combining. You don't get to go regular loan and I-10 half the loan. So it's either I-10, which is going to be a higher down payment, or regular loan. Upon marriage, what happened? Did you become a green card citizen? Is there a process to make that happen? So I-10 or not I-10? That's the.
And so you're looking for some criteria for that. So 15% down, 700 credit score. You already meet the credit score. You do need 15% down. Call us. We can fit you in. Lex, it's hard to own a home as a single mother with one income. No doubt, and that leads me to something else.
Yeah.
We've not been sharing this with you guys,
Yeah.
but I just put a video out on this feed called Money Mentor Chris. That's Money Mentor Lee. These are some side hustles that we talk about, and I do have a program for single moms. I actually talked about it today, that the most popular person having success at this side hustle to make extra income is a female 25 to 45 years old. If you fall in that wheelhouse, you're going to want to follow this one because there's a lot of good data on there and a way to make extra money, guys.
Yep. So we're here to help you guys get a house in 2024, teaching you the guidelines, working on VA, FHA, Fannie Mae, Freddie Mac, USDA, whole bunch of alt QM loans, and DSCR, which means you actually rent it.
Yeah.
It's an investment property.
Alvin 809. I was just 1099, switched over to W-2 again this year. Will I need to wait 2 years of W-2 work history
You
again?
take that one.
I love this one, guys.
Yes.
I love this one. So for you, Alvin, here's the great news. No, you can move forward right now. You need to show me 2 years that you've been working with these 1099s and filing your taxes, but we'll use your W-2 income, and you don't need to wait 2 years. You can move right now. Now, don't confuse this if you're going the other way. If you're going from W-2 to self-employed, you do need 2-year work history. You do need to prove to the underwriters, to the investors that, hey, I can do this on my own. I'm not depending on someone to give me a paycheck. So that's the concept behind it. So going from 1099 to W-2, we can move forward right now. Alvin 809. And what about my wife? Has 1 year W-2 and me 1 year W-2. Do we qualify 740 credits here? So for your wife, does she have a 2-year work history? That's the question.
Or a degree.
Or a degree. There you go.
If she came out of nursing school with a degree and she just worked as a nurse for 1 year, we can use all the schooling as time in service. Or if she got a bachelor's degree in engineering, became an engineer, or she became a doctor or whatever. But whatever, even if she was a journeyman plumber and she went to plumbing school and that took a year, I can take that year and use it as time and service, and I only need like one paycheck in that case.
And if your wife's a plumber, man, put her data there because we need good plumbers.
We need good plumbers.
Oscar Hernandez, 780 and up Riverside? Is that what you mean?
780 North Up Riv.
Okay. Oscar Hernandez.
Congratulations, Oscar.
AKA not vaccinated. Oh. Why did I read that? Thank you guys for the love. Thank you for the hearts. Thank you for the shares.
Thank you very much. We appreciate you. Double tap the screen. Give us balloons. Put a mustache on him. Mustache.
Daisy.
We appreciate you guys on Facebook, Instagram, TikTok, and YouTube. I know I point around there because that's how we see them. We have screens for each one of you guys. Trying to catch all your questions on all the platforms. So we're trying to help you get a house in 2024.
Daisy, if I have a loan on my name but I don't pay it, can the bank oversee that if I show proof? Ooh, here's a good question. All right, let me answer that. So if you took a loan, like a car loan, okay? So if Lee bought a car and I co-signed for him and Lee makes the payments, if we're both on the contract and Lee gives me 12 bank statements showing the payment coming out of his account, then yes, I cannot add it to your profile. But if I'm the only one on the contract and Lee's paying it, that's my debt. Okay?
Yeah.
So know that. If you can show proof that way, you're good to go. D Wright. What's up, D Wright?
What's up, D-Rat?
So can I get an FHA loan? I only make $47,000 a year with $233. What does $233 mean?
Maybe she's trying to get $233,000. If you make $47,000 a year, FHA loan is probably the better loan for you because an FHA loan is much more forgiving on the underwriting. They have a further back-end ratio. Best case scenario, I can go 56.99 on FHA. On a conventional Fannie Mae Freddie Mac, 50.99, and that's pushing it. Rarely does that get approved.
Yep. D Wright also says she had a 690 credit.
It's a great start.
Gold.
Yeah, it's a great start.
Gold.
Absolutely.
John Murray, where you guys located?
I told you, John, he's right there. I'm right here.
Facts.
Dude, right there, dropping facts all day long. By the way, did you see the
I
Ben
did.
Shapiro?
I loved
The
it.
Ben Shapiro? Oh my
loved
God. Ben Shapiro has the #1 rap video in the country. Ben Shapiro has the #1 rap video in the country. For those of you who do not follow Ben Shapiro, he's this great, smart young man. I don't know, young, 35, something like that.
Like
but
40
he's just sharp as a tack. And he has no problem arguing, and he comes from such a solid perspective that people love this guy and they hate him. They love him and they hate him. They love him and they hate him. And he makes fun of things. They're like, we went to a university, like, you're dangerous. And he's like, I'm 5'6". How am I dangerous? Yeah, with no muscles. Anyway, this guy, conservative guy, Jewish guy, very proud to be Jewish, very proud to be old school. I guess that's the best way to say it. Dude did a rap video with one of the greatest artists ever. Yeah.
He said, my pockets are fat like Lizzo.
I know. He was just blowing it up. Hey, Riverside, California is the answer to where we're located. Riverside, California. My primary residence is in Texas. We do a lot of loans in Texas, but we do loans in 49 out of 50 states. The only state that we do not do loans in is New York. But you got to put in Ben Shapiro, and then this guy's an amazing rapper. He's amazing. I've loved this guy for years. His name's Tom McDonald. And he has not signed with anybody. He's learned how to get rich by just promoting himself. And his raps are insane. He's got face tattoos, but his logic is so clean on everything. I love Tom McDonald. Loved him before Ben Shapiro. Dude, through the roof with Ben Shapiro. Yeah.
User 7755. How do I pay for a remodel? Well,
you write a check, pull some cash out, credit card, HELOC, home equity line of credit.
Ooh, that's a good one.
Cash out refi.
That's another good one.
We can refinance your house and pay for the credit, pay for the remodel.
Adventures, 591 credit score and make $5,600 a month. Wife credit score 700. Awesome.
All right. Well, you're in a unique situation because there's something out there that's kind of new, not really new, but less than 6 months old. And it's called blended credit. Blended credit is when you blend the high one with the low one. In certain situations, we can come with a happy median. Not all situations. Usually, it's Husband has 3 scores, we take the mid. Wife has 3 scores, we take the mid, and then we go with the lower of the 2. But there's a new guideline that came out that allows for blended credit, and you might just be able to get a house conventional conforming at 620. Thank your wife.
All right,
Thank
here's
you,
what we're going to do,
wife.
guys. We're going to do a commercial.
All right, cool.
You're going to screenshot this, and we're going to do rapid fire. We're running out
Okay,
of time.
cool. We're running out of time. Okay, cool. If you need a badass loan, call a badass loan officer. Your badass loan officers are Chris and Lee at New American Funding. You can call them on these phone numbers on the screen, but you have to screenshot it. It's going to disappear in 5, 4, 3, 2, 1. Bye.
Boom.
Cool.
Rapid
Hello,
fire.
I have a question, please. Go. Inky Primus. That was go.
I thought bro was George Lopez.
All right, cool. We'll go to
Debt.
that. Yep, debt.
That's
Yes.
all I have is debt.
All right, good for you. Congratulations.
Do you do commercial loans?
No, we do 4 units, but commercial loans at 5 units, not good.
Cherry pie, USDA?
Yes, we do USDA. That is geographically given. You go to USDA.gov, put the address in, and we can find out whether that loan can be done. We use the GUS underwriting system for that.
Dolores, I don't know how this sounds. I want to sell one family in Brooklyn, 4.25.
I think that's illegal.
Is it a
I think
good
we
time
got
to
rid of
sell?
that. Yeah, I think
Is
we
it a
got
good
rid-
time to sell?
I think we got rid of that. I think we made that illegal many years ago, selling people.
Jamie, where do I apply?
Where do I apply? You can go to our link at the top of the profile. Any of the platforms, there's a link, and there's a direct link to profile to apply, or you can just call us, text us. And if you text us on the platform that you saw it. So if you saw us on Facebook, type Facebook, and then we'll call you back. Instagram, TikTok, or YouTube. Text us on that platform. That's our code for you saw us on a live, because we get a lot of spam calls, a lot of things. Just text us, and we'll get to you.
Can I purchase a new $450,000 home in California with a credit score of 550?
Nope.
Also wanted to put $100,000 down.
Oh, wait a minute. I just got
Inky
stomped.
Wait, man.
I just got stomped. I got stumped. Okay, so FHA is 580 starting FICO score, 580. But you can go down to 500 if you put more than 10% down. So if you're putting a $450,000 house and you put $100,000 down, which is 20%, the banks start to overlook the guidelines, and that's a very strong possibility we can do it.
Happy Genie says goes to universities to pick on kids. Talking about Shapiro.
All right, cool.
I would say educate them.
Goes to university? No. He goes with the people. I love Ben Shapiro. This guy's so great because he's so founded in his facts. You can't shake him. And most people try to grandiose certain things. He's learned the art of not grandiosing, just resting in facts. And because of that, he can come back at everything.
Facts don't care about your feelings.
Yeah, I know. Facts don't care about your feelings.
Oscar said, fix the credit, better rate. You got it, man.
Yep.
You know it. Dive into crypto. Ben Shapiro followers think he's a genius, but compared to themselves.
All right. Yeah. Okay, cool.
Darwin Revenge. I want to buy a fixer-upper. Do I need a renovation loan? Is there the best type of loan for a fixer?
So Darwin's the main one that you're going to hear about. It's called a 203K loan, unless you're a veteran. If you're a veteran, there's a veteran's version of a 203K loan. But the 203K loan traditionally rides on an FHA. And yes, they can do it, but there's a set aside, and then you have to wait until the fixing has been done, and then somebody has to sign off on it. It's a little complicated. We've done them, but yes, they exist.
Check it out. Adventures is also in Riverside and says he will be in touch.
All right, Adventures, cool. One more time. I guess that's we're going to pick up the commercial. Ready?
Oh, okay.
If you need a badass loan, call a badass loan officer. Your badass loan officers are Chris and Lee at New American Funding. You can call Chris and Lee at these phone numbers on the screen, or you can text us. It's going to disappear in 5, 4, 3, 2, 1, bye. Secured home at 5.75 FHA in Texas. Badass.
Yeehaw.
Badass. See, people aren't believing that. New American Funding's putting out 5.5 right now, but 5.75 is still a great rate. Still a great rate. Yes, absolutely. Love it.
Any way around 2-year work history?
Yes, absolutely. There is. You have to have been in school for 2 years. Prove that you're in school and prove that you got a degree. You can't have dropped out of school and said, hey, I was in school. Yeah, but you dropped out. You didn't finish. So we don't really count that. So there is a way around that.
Come with a bigger down payment. You go non-traditional financing.
You can go that way too.
Booyah. What's your opinion on people stuck in zombie loans?
Get out of them.
All right. Darwin's Revenge. So is a 203K loan better than just an FHA loan?
I recommend no. I recommend that you get into the house first, but sometimes it's not inhabitable. So FHA has requirements, and the requirement is you must be able to live in it. If you can't live in it, FHA won't finance it. So usually people get a 203K to make the bathroom look prettier, but occasionally it's because the roof has a leak and we can't get that done. So we have to use the 203K. Do I recommend 203K? I'd rather go FHA direct if I possibly can.
All right.
Cool.
That's
What
it,
else we got?
folks.
Okay, cool. We've been Chris and Lee. We appreciate you guys. We'll be back.
Cheers.